Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, hope you're having a good weekend. We're going to look at the volatility sector here, the volatility index, TVIX, UVXY, daily, weekly, and then some hourly as well. So looking at VIX here on the daily time frame. So first thing what I want to point out is this volatility index has been a great way to lose money as a bull since forever. So you have to be weary of TVIX, UVXY, and these plays. Anybody keeping them in their portfolio long-term as a hedge is making a really bad decision because there's time decay as a factor. It's obviously in a very huge downtrend. And the logic I hear from a lot of people is it's gone down for so much, there's got to be a spike here soon. And if you're playing that game and playing against the trend, you're likely losing. I know people that are shorting TVIX and UVXY into infinity forever, and that's pretty much their residual income because of how consistent it is. They're instruments that are designed to go down. So there are definitely spikes where you can be trading, and it's very short term. These spikes are pretty much always short-lived. So day trading opportunities, short-term swings at the most. I personally will never swing any of these names overnight. And let's look now here. We're starting to see the potential shift here in a trend, but it's still very, very early on, and the bulls still have a lot of proving to do, to me personally, for me to believe there's anything more here than just a little short-term move. So we need to keep in mind the markets are still knocking on the door of all-time highs. Even after a big pullback on Friday, we're still just a few bullish days away from all-time highs in the market. So keep that in mind. So here's that big drop here on VIX. From June to July, we can see lower highs, lower lows. Then the bulls started to establish some higher lows and some higher highs over the past 3 weeks. We rejected on Friday from the upper Bollinger Band, the 50-day and the 100-day moving average resistances, but we did backtest and bounce off of the middle Bollinger Band and the 10-day support. So you can see that huge range with all the action and yelling going on. And essentially, this is a whole bunch of indecision. We're not really at the top of an uptrend. It's not very established, and not really at the bottom of a downtrend. So that just tells me indecision, and we're likely going to see trading within the range of Friday's range on Monday and likely to start the next few days of next week. So if the bulls can break out, get above the upper Bollinger Band, get above these moving average resistances, then it's starting to look like we'll get a little bit more of a longer term move. But if we pull back and cannot hold these middle Bollinger Bands, it's just going to be another lower high and another lower low in the trend. The weekly time frame shows that trend. Lower high, lower high, lower high, lower low, lower low. So it's absolutely, very clearly a bearish trend in the past year, and the bulls are being rejected from the 10-week moving average, the middle Bollinger Band, and then even if we see a bullish move, we've got the 200-week, 100-week, 50-week. We have to get all the way up over 17 to turn all moving averages back into support. We looked really good back here in June for a breakout, and then look at the huge dump that followed. Anybody looking to get in on that breakout and not using stop losses or not trading short term is now very much so in the red. And you see after 3 weeks, they say, oh, it's a big pullback. Maybe it'll bounce. It's got to bounce now. Red, 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 further downside. So let's now look at the individual instruments here. We've got TVIX and UVXY. We'll look at each on their own. So daily time frame for TVIX. Getting above the 10-day moving average support was a bullish development just because it hasn't occurred since all the way back at the end of June. So 2 months in a downtrend with that 10-day moving average as resistance. We get above it, and then the bulls tried to get above that middle Bollinger Band, which it's been just as long since we've had that as support, and we rejected from it. So the bulls need to get over that middle Bollinger Band to see progress continue to the upside. And if not, if we lose this 10-day moving average support, we're going to see lower lows. So the all-time low, I won't say the all-time because I'm not zoomed out enough, but it very well could be. Let's answer that right now. Zooming out 5 years real quick. So yes, it's the all-time low. And here's what I'm talking about. This is designed to go to zero. There will be reverse splits into infinity, and anybody long in TVIX is losing. So if we lose a 10-day moving average support, we're just going to see lower highs and lower lows. And again, it's just a couple bullish days in the market away from occurring. But if we see further weakness in the market and the middle Bollinger Band becomes support, then we can start looking to some of these other resistance levels. We've got some previous support here at 27.50. That's going to act as resistance on the way up, and we'll get those moving average resistances, or excuse me, the previous price resistances that we'll be watching if that middle Bollinger Band becomes support. Bulls really need to prove themselves to me at that level. The weekly time frame is trying to build a base. We do have a lot of room before this 10-week moving average resistance, but look at this downtrend in 2016. Tons of money to be made bearish, tons of money to be lost bullish. Let's now look at UVXY and compare the two. So they're very, very similar, and UVXY still trying to get over its middle Bollinger Band as well. 21.45 is that resistance, and the weekly time frame for UVXY also looking very similar, trying to build that base. Need to see higher lows and higher highs on the weekly begin to form to see a nice, clear bullish reversal confirmation from the past couple of weeks. So let's look at the hourly on UVXY and get a little bit of a sense on when the bullish break occurred. So this 200 period resistance rejected a bounce attempt, red big time all the way to the downside, weakness, rejecting from these moving averages, rejecting again from that 200 period, bounced off the 100 period support, and then there's your bullish break right there on Wednesday. And then obviously on Friday, tons of stop losses triggered with a huge bearish move first thing, and then a big bullish spike towards the end of the day. So huge volatility on Friday, which certainly does make using stop losses very difficult on TVIX and UVXY due to these big wild moves. But if you're not using stop losses, let's see, if you were in at the open on Friday, let's say you were in at $20 even, next thing you know, you're down 5% in the first hour of trading, and then if you get stopped out, you miss a 15% move to the upside. So huge volatility. This is not for the weak-hearted here, and I would personally only be trading these instruments if you are an experienced trader. So we'll see what next week brings, and we'll be watching the middle Bollinger Band resistance on the daily time frame to see if this bullish attempt at a move is for real. And I will check back in eventually, probably next weekend. I appreciate you watching. Have a great rest of your weekend.